So in terms of vol, we're seeing realized vol pretty much collapsing last week. We had that big move, obviously, that then got faded, and then the market just did nothing. We did see a bit of weakness yesterday, but it wasn't too dramatic. And we can see here, 10-day realized kind of collapsed into the mid-20s for both Ethereum and Bitcoin. Implieds have followed suit. They've gone down, obviously not at quite the same pace, though, with Bitcoin down 4 vols in the 1 month and ETH down about 6. Despite this fall in implied volatility, carry is positive. So we've got positive carry back there. It's about around the 50th percentile, so median sort of levels, 7 to 10 vols of positive carry across the two. And that is enough juice probably to attract some gamma sellers. And we have seen gamma sellers still in Ethereum. Now we've got 28th of July expiry coming up this Friday. About 30% of Bitcoin and 25% of Ethereum's rolling off in terms of options. Now the gamma positioning has got a bit longer as we've drifted down. Obviously that is partly, that spot down, vol down dynamic that we've been seeing in crypto is partly because we're moving towards long strikes into that expiry, and we haven't really seen vol care about spot breaking 30k support. Okay, so the fact that there's no real fear or panic on that is partly a function of the street having optionality down there, but also the realize has been relatively well behaved on the way down, right? And we've seen that all year. Generally, when spot rallies and starts looking like it's breaking ranges, vol goes bid, and then when it retraces and corrects, provided it doesn't do it too violently, we see vol pull back, and we are seeing that happening again. Jumping over to term structure, we can see that the whole thing's shifting down. So on the week, you see Bitcoin shifting down a little, not quite parallel. We're seeing about a 5 vol shift in the front, and then like in December, about 3 vols, and then the back end less than that. So still steepening in terms of contango. Low realized vol is pushing the front end of the curve down, but the back end is also giving way because option flows have dried up this week, right? So we haven't got as much buying going on in the back end, and so the back end is also coming under pressure, and it's being dragged down with the front end that is being driven down by realized vol. Looking at Ethereum, we're seeing also a big shift lower. 7 vol move in the absolute front there. Even September was down 6.5 vols, which is a pretty brutal move for September. But then going to next year expiries, you're at 1 to 2 vols lower. So similar sort of story. Big shift down in August and September vol in Ethereum, giving back any sort of momentary pop that it had last week, and then those back ends getting hit as well in a similar magnitude, maybe a little bit more actually than what we're seeing in Bitcoin. Like I said, ETH doesn't really have that halving narrative and stuff, so people may be a bit more willing to sell long in vol there. Okay, looking over at the vol spread. So the vol spread has shifted back down below 0. So last week it did try and pop a little bit, seeing that move back down. And that's partly because the ETH Bitcoin spot spread has kind of not done a lot as well. It's run out of momentum. And so we're getting mean reversion back to a level that's kind of flat or slightly negative in this spread. So, whilst over time, going back 6 months and certainly going back longer, we've had Ethereum vol always trading above Bitcoin. The market is now well and truly saying, we're not going to let Ethereum trade above Bitcoin for very long unless it justifies itself. And it hasn't done that for a while, right? It had one pop where it looked like it was doing something, and then that failed, and the market gave up on it pretty damn fast. Okay, so the bullish narrative in crypto is centered around Bitcoin, institutional adoption, halving. It's not about the innovation in the Ethereum ecosystem and the build out of all these dApps and stuff. That's not driving the narrative in price at the moment. That's not to say there's not innovation going on, and in the longer term, ETH's going to be huge and there's going to be loads of stuff going on there, and the staking, the change that's been made due to staking and the staking yield and all these things are all very positive for ETH. It's just not driving the narrative right now. Yeah. Now, we do think that if Bitcoin later on this year did pop above 40K, then the narrative would likely flip, and you would start to see the alt space kind of getting more traction, and people would be looking at Ethereum, say, if it was lagging Bitcoin, saying there's value there, and then they would try and do a catch-up trade, and you'd see Ethereum come alive. But that's why maybe longer dated upside in Ethereum is worth owning, just because it is getting hammered right now. And we are certainly seeing people buying like March 23 upside and stuff like that in ETH. But, you know, we think Bitcoin needs to have its leg up first before this narrative changes and we start to see some real traction in ETH. Okay. Looking at SKEW term structure has steepened. So we've had front end puts have caught a bid as we have broken below 30K. And we had said that was going to happen if we broke support. The back end, though, the call premiums actually persisted and it's even stretched a bit further. So right now we've got 1 week SKEW showing around 0.8 premium for puts, and we've got 6 month SKEW showing a 5 vol premium for calls. So quite a steep term structure there of SKEW. This tells us a very clear story about the market's perception regarding the latest sell-off, basically saying it's a short-term move down, longer term you want to own this market, buy the dip, right? That's what the vol market is telling you in the way that it's shifting SKEW. ETH SKEW had a similar dynamic with the front end puts getting deeper into the premium. So we had a 3 vol premium for puts on Ethereum. And then we've got the back end still in calls, not as much as Bitcoin, only about 2 vol premium for calls out in that 6 month bucket and beyond. Now the SKEW differential between Bitcoin and Ethereum and the fact that the vols are pretty flat, if not slightly lower in ETH, is creating a sizable discount for longer dated calls in ETH compared to Bitcoin calls. So now we don't really like that as a spread. That's something Raoul Powell discussed in our Trader Chats interview with him a couple of weeks back. Check it out on our YouTube channel, right? If you haven't. But basically, he thinks that's a misprice, right? He's very bullish Ethereum. He thinks ETH calls versus Bitcoin calls at flat are a no-brainer to own ETH calls. Personally, I've done that trade before. I did that trade in 2020. And we started to see Bitcoin lead the rally first. And I got pretty nervous on my Bitcoin, so I just bought them back and I stayed long the ETH calls and it worked out amazingly, right? But I just don't like the short leg of the Bitcoin because I do think Bitcoin charges first. So I think just looking at it, Ethereum longer dated upside does look cheap, and just buying those and parking them in your back pocket, March, June next year type expiries look pretty attractive at these vol levels. You're not buying 100, 150 vol, right? You're buying 50 vol for a crypto which can re-rate ridiculously if it wants to, if it gets a story going, right? So I think longer dated ETH looks amazing to start accumulating. I wouldn't be selling Bitcoin against it though. Okay. Right. That is what I'm thinking in terms of the relative value. Dashboards, obviously they're in buy calls territory right now. I wouldn't be surprised if we eke out a bit more downside. So I'm not jumping out, buying a load of calls right now. Looking at the option flows, we did see volumes come down as spot drifted lower. Flow was still massively skewed to the upside. Outright calls were being bought in the front end in July, expiring this Friday. All these yellow bars are calls either being short covered or bought. There was some rolling into 4th of August as well. Longer dated call spreads seem to be the in vogue strategy right now. So you can see strikes around sort of 35K getting bought, strikes at like 50K getting sold, both in December and March 24. And then we did see a little bit of protection demand here in the 28K down to 25K strikes in both August and September expiries. So not huge, but starting to see as we did break that 30K support, few protection buys came in as the vols are very cheap, right? So you're not paying tons for that protection in relative terms. Then Ethereum volumes also settling back. They had a big spike last week, obviously on the rally, it got faded. A big skew towards bullish trades still. What are people doing? They're buying outright calls, 2,300 strikes in DEC and March next year. We saw some put spreads getting sold in August. That's the 1,900, 1,600 put spread in a reasonable clip. Bullish risk reversals being put on in various expiries. So we had a September 1,600, 2,200 bullish risky. March 24, 1,500, 2,100 bullish risky as well. Some longer dated vol being bought in December via strangles. That's a 1,600, 2,400 strangle, taking advantage of these very low vols. And then gamma still being sold with August 1,900 straddles getting hit. And that's just systematic sort of gamma selling, which we've been seeing for quite some time. Okay, looking at gamma positioning. It's positioning drifting higher as July expiry approaches. But as you can see, Bitcoin's kind of been flatlining close to zero. We've moved away from these 31K short strikes into this zone where there's some long gamma, long strikes. So we're a bit more neutral net, but it kind of explains why we're not getting acceleration on the way down as the street moves away from shorts and towards longs. ETH, we are seeing gamma kind of drifting higher. So it is trading long right now. This big 1900 strike to July is clearly having some impact. It's taking the gamma higher. We don't think it's as imbalanced as it was back in June. So we wouldn't have as much strong conviction of the market pinning right now. So we're not going out selling iron condors for this pin. But what we do think is if it does manage to pin the market, once this 28th of July goes away, then we may get some scope to have a move higher. So then, waiting for that expiry to pass before you pile into a load of upside in ETH, if you like upside in ETH, it probably makes sense to hold off and wait for the expiry to go. That's what we're thinking. Okay. Now, what have I been doing? Okay, that's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.